please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Let's take a quick check on those Asian markets. A couple of them should come up for you on the screen. The Shanghai market as well as the Hang Seng. Both of them are trading in the red. In fact, they're trading with a bit of a cut. But the Nikkei, that's the one we're looking at. Remember, when we started off the show, it was trading mildly lower. So maybe it makes sense to pull up the intraday chart of the Nikkei. That'll give you a real picture. That's recovered a goodish bit from the low point of the day. And it's not just the Nikkei. Remember, you're getting commentary coming out of North Korea that there could be another strike, missile attack, etc. Now, that market as well was more or less flattish with a bit of a negative bias when we started off the show. Pull up the Kospi's intraday chart. That's sitting with a gain of close to around 0.4%. So clearly, Anisha, we've been quite lucky for those Asian markets. But the big question is, what's the SGX Nifty doing? When we started off the show, the SGX Nifty was indicating a bit of a downtick. Now it's indicating a start in the red, but not that much in the red. So maybe a 20-point downtick is what we could see. When we started off the show, well, it was indicating a 35-point downtick. But let's move on then. GST revenues for the month of October has declined by around 12% compared to September. The figure for October is just over 83,000 crore rupees, and this is significantly lower than the 95,000 crore rupees that was reported last month itself. Speaking exclusively to CNBC TV18, Finance Minister Arun Jaitley said that the collection is not a major concern and another 5,000 crore rupees will be added to October's collections. Timsi Jaipuria filed this report earlier.
Well, the GST collection figures, the revenue collection figures for the month of October are coming with a little surprise. There's a sharp decline of 10% in October. The figures which were hovering between 90 to 95,000 odd crore rupees in the first month, that is July, September and August, have now slipped to 83,346 crore rupees for the month of October. Similarly, the cumulative figure for the 4 months for SGST cited by the government today is around 87,238 crore rupees, and for CGST it has come to about 58,556 crore rupees. Government this time is silent on the breakup for the month of October on both CGST, SGST and IGST. However, government in the press release has cited it very clearly that the revenues of the states are well protected. They have been compensated from time to time. About 10,000 odd crore rupees were given as compensation to the states for the first 2 months, that is July and August, and similarly about 13,000 odd crore rupees were given to the states as compensation for the remaining 2 months, that is September and October. There are various reasons that the government has cited in the press release for this decline, such as people using their credit already available in the accounts to settle the payments, and government expects that more numbers are yet to come because this month there were less number of returns that have been filed. Earlier in the first 3 months, about 58 to 59 lakh people were filing returns, and this time only 50 lakh people have filed returns. So the numbers are yet to be compiled in a formal way, but yes, as of the provisional figures, there is a sharp decline of 10%.
Okay, thank you, Timsi, for that. But staying on the subject, Morvin Godino, the member of GST Council, says that the fall in revenue collection is a one-off and that overall collection will stabilize going ahead.
Sometimes manipulations do take place by the businessmen and traders. When you take such a big step that the government or the GST Council has taken, one cannot expect overnight everything to change and fall in place every single month. Just because for one particular month the revenues have fallen, that is not going to be the trend. Ultimately, things will stabilize. We are taking steps. We are responsive to the market sentiment.
Well, and there seems to be trouble brewing for Anil Ambani-led Reliance Communications. CNBC TV18 learns that a consortium of lenders from China, led by China Development Bank, has approached the bankruptcy court to recover its dues of around 9,000 crore rupees. We learned that lenders have filed the petition at the Mumbai bench of the National Company Law Tribunal. That's not all. We also learned that, in fact, domestic lenders may resist the NCLT proceedings. Nisha Podar as well as Ritu Singh, who have been tracking these stories, join us now. Nisha, first to you, tense times for Reliance Communications, isn't it?
Pressure is clearly mounting on debt-laden Reliance Communications. Sources with direct knowledge share that a large lender for Reliance Communications, that is the Chinese consortium of lenders, has really gone ahead and filed a case against Reliance Communications under the NCLT. They want, as sources suggest to us, the Chinese lenders want the entire debt resolution of Reliance Communications to be done under the Insolvency and Bankruptcy Court. So that's the main idea for going to NCLT. Now, remember that out of the 44,000 crore rupees of debt pile on Reliance Communications, and with some of the resolution efforts in the past failing, like Aircel merger not going through and the tower sale to Brookfield not seeing any headway, the lenders are clearly jittery at this point. Now, remember, when we are talking about the Chinese lenders, these are China Development Bank, Industrial and Commercial Bank of China, the Export-Import Bank of China. So these are the participants of the Chinese lenders consortium who have gone against Reliance Communications to the NCLT. Now, of course, it needs to be seen whether the case is really admitted by the NCLT going forward or not.
Thank you, Nisha, for that. Well, of course, the company is taking resolution step in the sense of selling the non-core DTH business, Big TV, to Pantech Tech and Vicon Media. But Ritu, coming to you now, CNBC TV18 also learns that Reliance Communications Indian lenders may resist these NCLT proceedings. Now, what are the Indian lenders actually concerned about?
We understand from sources that Reliance Communications domestic lenders may resist any move by an outside party, or for that matter even China Development Bank, to drag Reliance Communications into the National Company Law Tribunal under the Insolvency and Bankruptcy Code. And this is because they feel that a resolution process is already underway outside of the NCLT procedure by way of strategic debt restructuring, which was invoked for the company a few months back. In fact, we understand the banks are looking to seek some sort of a standstill until the 28th of December, which is when the time to convert debt into equity for SDR to go through lapses. So until then, they do not want any distractions by way of NCLT, because remember, if the court admits this case, all the lenders will automatically be pulled into the NCLT procedure, and anyway the resolution plan is on thin ice, especially with the merger with Aircel falling through.
Telecom regulator TRAI plans to issue the much-awaited recommendations on net neutrality today, a move that is likely to impact the future of apps that provide calling and messaging services. Kritika Saxena joins us with more details on this. Kritika, what can we expect from the recommendations on net neutrality today?
A 2-year-long debate is expected to come to some kind of closure today. The Telecom Regulatory Authority of India will be coming out with its recommendations for net neutrality. So the final policy on the norms will not be coming in. Once they come back with a recommendation, they will be submitting it to the DOT, and the Department of Telecom has to give its final approval. There could be some kind of to and fro here and there, some kind of objections raised, but yes, net, we are expecting clarity today. What are the recommendations expected to be? There has been a lot of debate, but broadly we are expecting a clarity as far as the definition of net neutrality is concerned, the broad contours of net neutrality. We are expecting the TRAI to introduce some form of network management, some form of traffic management practices which net neutrality must have, which OTT players must adhere to, and we are expecting them to outline norms to enable the prioritization of critical services like welfare scheme, or in the case of emergency services, etc. Now, so far, what have the telecom service providers like the Idea, Vodafone, Bharti Airtel of the world been saying? They say that OTT players have been making a dent in their revenue and they should be regulated. The calls and services and any kind of service that is provided by OTT players must be brought to a level playing field with the TSPs, and a penalty must be imposed if at all that is violated. On the other hand, OTT players like WhatsApp, Skype, Vibers of the world say that there should be a level playing field. The right to internet access cannot be regulated according to them, and that they should have the right to freely offer their services based on their guidelines and regulations. So there has to be a balancing act that TRAI will probably look at bringing in. What we are expecting is that the in-flight connectivity norms, which were also expected to come in along with this, will take another 10 more days. But yes, the final clarity on net neutrality and which way the government is going to bend will be clear today.
Okay, Kritika, thanks so much for that. Well, we'll slip into a short break. Up ahead, we'll get to the cues to track. Then let's shift focus to the commodity space. Manisha Gupta joins in early this morning as always. Hi Manisha, good morning. We're looking forward to that OPEC meet. How are you reading it? Crude prices in focus? Manisha? Okay, I think, all right.
Well, yes.
Yeah. All right, Manisha, go ahead.
Yeah. Yes, we have seen some profit taking early in the Asian market right now, and that's because, one, the commodity has been overbought. We've seen just one side direction for this. Two, the supply concerns from Canada seem to be getting over now to restart today. And third, Russia still hasn't agreed or, gotten a resolve extend output cut and will support OPEC's resolve in that. So that is one thing that has led the market into profit taking. In any case, the build-up up to this meeting has been quite strong, and ahead of that, a bit of lightening of positions is what you are seeing in this phase. But the sector that continues to do well has been metals, because you have the US dollar continue to trade on the weaker side. The gold, in the meanwhile, is trading at a 6-week highs. We have seen support come back for that. In the other metals as well, you have the copper prices trading on the higher side. Even as China's output has been good, the Chinese import for copper has been on the higher side. And not just copper, if you look at the lead imports, those have increased quite strongly. Iron ore imports also have been on the higher side. And with the steel prices trading up as well, you have seen all the steel ingredients as well come back into favor. So everything in Shanghai today is yet again trading in positive. Of course, there are various global cues to watch out for, right from voting on the U.S. tax reforms to the Brexit offer, where you have a deadline for the next 8 or 10 days. Markets would be taking in cues from all of that. But having said that, the kind of declines in inventories that we have seen for many of these metals and strong demand estimates, even as we get into 2018, will keep many of these metals on the positive side.
Okay, Manisha, thank you for briefing us regarding the cues from the commodity space. But for the cues lined up in the derivative space, Mangalam joins us early this morning with all of that. Good morning, Mangalam, over to you.
Well, Anisha, just 2 days ahead of expiry, no real directional cues coming in from the futures and options space. But apart from that, we have a lot of fringe players looking at eating into the premium that is available at a lot of the options. That is the key theme. As far as index futures are concerned, close to about 100 crores worth selling. But what did really stand out was 32% rollovers just 3 days ahead of expiry. That's slightly on the higher side, so a little more conviction than before. The FIIs, they bought about 1,350 crores in index options. A large part was deployed towards protection, buying on the downside. A lot of long positions in index puts were added. But by and large, remember, 10,300 put as well as 10,500 call, they still have the maximum open interest. We're around that 10,400 mark, so 100 points on either side. The Nifty put-call ratio virtually looked unchanged at around that 1.45 mark. But remember, from the lows of the day, it actually recovered from 1.35 to 1.45, given the sort of recovery that we saw in the last hour of trade. The 10,400 put, that one saw a lot of selling in the previous session, short covering yesterday after the markets went down. But as the markets recovered, the bulls went ahead and rode that put with a lot of aggression. 10,600 call too saw a bit of punt buying for 3 rupees a pop. But keep an eye out on the mid-cap space. 14 stocks in FNO ban. TV18 broadcast with a standard disclaimer, of course, enters the FNO ban. As at the same time, we have Reliance Communications. That one exits the FNO ban. Watch out for these stocks.
Okay, Mangalam, thanks so much for that. Well, on that note, we'll wrap up on Power Breakfast. But as we do that, we leave you with some picks of our bullseye contestants.
Bata, buy with a stop of 728 for targets of 795. Jain Irrigation, buy with a stop of 110 for targets of 120. Reliance Infra, buy with a stop of 454 for targets of 495. And TechM, buy with a stop of 493 for targets of 545.
First one is buy call on Orient Paper with stop loss at 127, target price of 145. Second is long call on West Coast Paper with stop loss at 227, target price of 254. Third is long call on Tourism Finance TFCI with stop loss at 160, target price of 175. Fourth and final is long call on DLF Limited with stop loss at 229, target price of 245.
Buy call in Brigade Enterprise with stop loss below 288 for target of 330. Buy call in Ajanta Pharma with stop loss below 1325 for target of 1440.